Hey, what's up guys, welcome back to tradeiq, and for this video I'll be showing you guys an insane 15-minute swing trading strategy that can help you to ride all those big trends and huge percent gains that you guys see when trading the crypto markets. So this is a very good strategy for people who want to ride the big moves, those moves that are made out to 20 to 30% worth, and just by trading on the 15-minute chart, this means that you do not have to spend a lot of time looking at the charts, and following the indicators is very simple. And in this video I'm going to show you guys how to use this strategy. So if you guys watched my other video where I showed the best trading view indicator, I'll be using the same indicator, but instead I'll be using this on the 15-minute chart. And why is the 15-minute chart better than what I did on the 1-minute chart? It's because the data that the candles give are way more reliable. And also I'll be adding other indicators such as the EMA to improve the strategy. So now I'm going to show you guys the indicators that you'll be using. So first up is your EMA, which is the main trend that you guys will be following. So you're going to change it to your 200 EMA. You can make it to any line you like. I'm going to make it a white line. And next up is your RSI algo, and you'll be using the algo trader. So as you can see, there's the sell and buy signals, so it's quite simple to just follow this. So how does this strategy work? You'll take the position when there's a sell signal below the 200 EMA. So in this case, where the sell position is above the 200 EMA, you do not take that position, but you only take it when the sell signal, in this case like here, the sell signal is below the 200 EMA. Same thing for buy position, you only take the buy position when the buy signal is above the 200 EMA. Same thing here, buy position is above the 200 EMA, so you'll take that. So let me show you guys how does this work. So let me find a signal. So right here we have a sell signal. So what we'll do is we'll enter the position right on the sell signal candle, which is right here. And where will your stop loss be? Your stop loss will be right above the recent swing high. And for this case, where you want to ride the big trends, you're not looking for a profit target, you're looking to take the profits of the entire trend. So maybe even though you might think, oh, I'm just going to take a 1:1 right here, what you're missing out on is all these profits here that can be taken. So you only got 4.2% here, but let's say you ride it to the bottom here, you could have gotten a big 15.8%, or make that even 16%. So basically this strategy we'll be using a trailing stop loss, and I'm going to explain to you how a trailing stop loss works. So in this case here, I'm just going to drag the profit target all the way down, because you won't even be needing the profit target, and I'll be using the lines, this horizontal line, to represent my stop loss. So I'm going to make it so that you guys can see where my new stop loss will be and how do I trail my stop loss. So basically, if you guys don't know what trailing stop loss is, it's basically moving your stop loss down and down as the price moves forward, because you don't want to give back all your profits. So your first stop loss will be when the swing high is, so it'll be right above the swing high. So once you have the sell position and it moves down, let's say it moves down to here, you want to move your new stop loss to right above the next swing high. So how do you identify swing high? It's basically the next is the highest price of the previous move. So here we have a down move and a small up move. So here is your new swing high, this box here. So what you do is you're going to move your stop loss to this level. So we're going to move it right here to here. So next up, you have another move down, and you have consolidation before a move down again. So this is another move down where there's a lower low. So whenever they makes a lower low, you want to look for the next swing high, and here is your new swing high where there's consolidation. So you can move your stop loss to this level here. Same thing, we have a breakdown to a new lower low and a push back up before a breakdown again to another lower low. So this is your new swing high, and you're gonna put your stop loss right above the candle. So right here is your new stop loss. So let's say price were to go back up and hit your stop loss, what will you be getting? Let's look, drag the profit to there. You'll be getting a 3.89% gain, which is still not bad. But however, the strategy is good in the sense that if it keeps moving down, then it is going to increase your profit target. So here we have another move down and a move back up. So this is your new stop loss right here. You want to make sure that there's a bit of gap above your new swing high so that it can bounce back up, because this is your new resistance. Bounce back up and then head back down. So this is your new stop loss, and back down here, and moves all the way down here. So where is your new stop loss? In the sense that here technically is your new swing high, but you don't want to give so much profit, 7% off, because even if you put your, let's say you put your stop loss here, if price goes back up, you're gonna lose so much of your profit. So I'm gonna put it at your next level, which is this green candle here. So technically I'll be stopped out at this position where price goes back up. So basically it really depends on how the market conditions are. I tend to just trail it based on your swing high, but in this case where there's big moves and you want to have all of your profits taken, you want to make sure that you do not want to give so much of your profits back to the market, but you must make sure that there's a bit of room for it to wiggle. Wiggle basically just means that for it to consolidate, for it to pull back and everything. But in this case, that I would put my stop loss here. We're going to look at our take profit, and that will be a 13% take profit, and that is how your strategy works for buying. So in this case here, we have a buy signal, but since price is below the 200 EMA, we wouldn't take that position. In this case here, we have our buy signal right here, and now I'm going to show you guys how I would throw my stop loss without giving instructions, just as I did just now. So here we have a buy position. I'll enter that because the buy position is above the 200 EMA. Stop loss will be right below the swing low, and now we have the movement upwards where it breaks the new high, and this is your new stop loss right here. It's your new stop loss, so you can move it. We have a break upwards, high high, a new higher low, and a break upwards again, so this will be a new stop loss. Same thing, we have a break upwards, a move down, and another break, so this will be a new swing low. We have a break upwards, down, and a break upwards, so this will be a new stop loss. So then in this case here, if it moves up again, you can place your stop loss here, but I wouldn't. I'll give it some room to wiggle a bit. So this will be where my final position will be. So we're going to look at the thing right there. This will give us a 6.8% gain. So if you're using 10x leverage, there will be a 68% gain on the account. But make sure to not risk that much because your stop loss will be quite big as well. So here we have another buy position. Let me show you guys again. So buy position right here, stop loss will be here, and we'll have our move upwards, move back down, and we have a move consolidation. So in this case, since we did not break the higher highs here, I'm just going to leave it how it is. I'm going to let it consolidate, and I will not move the stop loss. So you have to wait for a break above the recent high before I move the stop loss, and this is where it happens. My new stop loss will be at the swing low, which is here. And here we have another break upwards, and my new stop loss will be here, recent swing low, break upwards, new stop loss will be recent low here, and here you have a move upwards. You can consider to place a stop loss here, but I'm gonna just leave it at this position here. And if we look on our profit target, it'll be at 8.67%. So definitely you can get a lot of big trades. If we look at this trade right here, this trade is insane if we were to have the sell signal. But if you guys realize the sell signal is above the 200 EMA, so definitely you'll miss out on some of the big trades like this whole, I'm pretty sure it's about 16% to maybe 18%, but it helped to filter a lot of bad trades. Like here where you have a sell signal above the 200 EMA, you wouldn't take that position, and you, in this case, if you were to take that position here, you wouldn't lose that 3.7%. So definitely you still get big trades. Like from here, you can scalp it all the way up to this level here, which is a huge 28% gain, and just by following the strategy. So I think that is about it for this video. The trailing stop loss strategy together with what we are using right now for the indicators might be a bit confusing for y'all, but make sure to check out my other best trading view indicator where I explain the same thing, but I explain it in a different way, so maybe you'll get to understand it there. But if you guys have any questions, just let me know in the comments below. I'll try my best to answer them. But yeah, this is one of my favorite swing trading strategies, and especially if you don't have a lot of times, as you can see, you can sell it at above, then you can buy when it's low. So it's just basically a buy low sell high strategy, or sell high buy low strategy. And yeah, you can scalp all the way up to this huge 58% type of gains, and it can get quite crazy for the profits wise. So yeah, thank you guys for watching, and see y'all in another video.